one big takeaway I take from this conversation is that it is meant for investors who are looking at long-term wealth creation, who are more patient, believes in the benefits of compounding. So now let's start with step one. You said elimination is as much a part of your framework as the selection. So we have 2000 plus listed stocks. What kind of parameters are used to get to your investable universe?
Sure. So, anyways, investors who might have seen our document or have not seen, I would urge them to look at it. We've actually given in great details what are the quantitative metrics which we really look at, but I will just explain them for the benefit of all. And beyond these quantitative metrics, there are a lot of qualitative aspects which we surely like to, have a good hold upon before we get into any of these investments. So in terms of the basic let's say factors which we are actually looking at, I mean, where do we see that businesses can create long-term wealth, where businesses are durable enough, they have seen long cycles in the history, and they have not only survived and thrived, but they have through time grown, have achieved leadership profile within their business. And that is something which we believe is the real moat which any company enjoys, which has allowed them to grow in the past. And we believe that those moats, if sustained in the future, should give the companies the ability to grow. So what we are sort of looking for is the ability to sort of outgrow the industry. That is something which allows us to remain ahead of the curve. The second aspect what we are looking at is the longevity of growth for the business, which means that how long can the business actually keep doing what they have been doing in the past. And this is something which requires a lot of skill and judgment, and is also a area where it is possible that we may also go wrong at times. But I think growth becomes one important metric. Second most important metrics is the capital allocation decision by the management. This is the capital allocation decision actually really determines the future prospects of any business, because what you are investing today is going to deliver you over a period of time. Now, we have seen a lot of decisions being taken by the management in terms of the capital misallocation. Many times, they want to diversify into areas which are suboptimal in terms of the returns and all, and those probably are potential threats, or basically beginning where the companies then destroy wealth. So I think we are very mindful of how the capital allocation is happening. So for that, we really look at the ROC and incremental ROC for any company. That is one of the important aspects which we focus on. The other aspects is the profitability of the company, the margin profile, which actually in a way determines the pricing power through cycles, how the company has performed in the past. So we like to look at the history. We like free cash flow generating businesses. Businesses where the managements have managed the working capital well, and these are, and then we have some other ratios which we try to focus on, which gives us more data around the forensics, whether the companies they have genuinity in the numbers. So I think we look at the tax rate and few other aspects. And more importantly, beyond these quantitative metrics, we have the qualitative assessment of the management. Through time, their decision making, strategic decision making is something which we like to see, so that we know that these management's interests are aligned to our interest and our investors' interest. And that's what actually are the basic factors which we are looking at as far as the companies go in terms of what we want. And the companies which don't really meet these are eliminated in the process.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.